Away from, well, January's already in the rearview mirror. We look back at risk appetite, and is it back on the table? Stocks are once again in record mode, erasing the downbeat performance from January. I mean, look, if you remember last year, after falling more than 3% in January, the S&P 500 bounced back in February, went on to end the year with a stellar 11% gain. So does that mean we see another year not only of double-digit gains, but bucking that January trend, where if it's down in January, the rest of the year is down, or will global headwinds push these markets south? Fox Business exclusive with Robert Wolf, 32 Advisors, founder and CEO and former head of UBS Americas. Robert, you are striking a little bit of a more cautious tone now, just as we're hitting records.
Well, it's great to be here on a record day. How's that?
That's all you.
I mean, listen, it's great to see Boeing, Honeywell, Disney. I know all the CEOs. They're great visionaries, and they had a great fourth quarter. Right now, not surprising, the markets have done well. Okay, you have incredible low rates, people being forced into the markets. You've had decent earnings. All the growth seems to be in the United States right now, but the dollar's incredibly strong. Okay, we have not seen that for a long period of time with a very strong dollar. It's been actually the opposite for 4 of the last 5 years. And you have to feel that that's going to hurt exports. It could have a bit of a dampening on manufacturing. We've had an incredible export initiative for 5 years. And so that's one thing that I'm cautious. Geopolitical risk is certainly, seems to be a nervous tension every day.
What worries you most? We have a ceasefire in the Ukraine between Russia and Ukraine.
Let's hope we have a ceasefire.
We're not even,
we had that ceasefire last time. And then I think you have to feel that the energy boom and less boom and maybe boom again is bringing a lot of volatility.
I look at that, Robert. I look at the energy and people saying, oh, there are going to be layoffs there. Well, there's always a boom and bust in some sector, isn't there?
Here's my nervousness. In one side, it bodes very well for the U.S. We're a consumer-driven country. 70% of our GDP is consumer-driven. Lower fuel prices is good for the consumer. On the negative side, a lot of the gains over the last few years has been the energy boom, both in the capital goods buying and the manufacturing and the production. And so right now, if there's a slowdown, both here and abroad, you have to have some nervous tension there.
Okay, so then do you say, I'm not going into stocks right now, or I just remain a little status quo and don't touch my portfolio? What would you be doing?
I'm not a stock picker. It's not something I like to say. I think right now there's going to be, if you can take care of volatile days going up and down and the geopolitical risk, it seems to me that we're going to have low rates for a longer period than we would have thought.
Do you think the Fed moves this year or not?
I think the Fed moves, but, Austin Goolsby's at 32 Advisors. He came out with a piece yesterday saying that, the Fed move could be delayed because he actually thinks first quarter GDP could be slowed because of weather. We've seen that last year. That could happen again. I mean, I know everyone's excited about today's European GDP numbers, but the truth is 0.3% gain is not anything to be all that excited about.
So much of that was lifted by Germany.
Right, Germany, 50% of their GDP's exports, and the dollar's weakened. The euro's weakened there. That's helped them. So I'm very cautious here.
I sense that. And you've ruined my whole Ken here, this excitement about all the records. Actually, no, we want the real story here. But I find it interesting, considering that you, of course, have been the non-administration economic advisor of President Obama. I have to ask you, the last 3 months of job gains have been the best paired together in 17 years. Yes, we stumbled on consumer sentiment, the most recent print that came out today. But why, when you look at a lot of polls out there, is there this disconnect between Americans feeling like they're still very much, I'm in a personal recession, I'm not making enough, I'm having to hold down 2 jobs, and yet the data on many levels looks good?
So I want to make sure we're differentiating from my cautious look on the markets is very different than my incredibly optimistic look about the United States and the recovery that will continue. I actually think we have had employment go up. I think more importantly, average hour work week has gone up. A lot of the elasticity that we had has been taken out. And now the next thing that's going to go up is wages. That's the thing that we've been missing. With all these employment numbers that we have seen, been incredibly positive, 5 straight years of good economic gains. The problem is we have not seen wage inflation. And I think when you take out the demand, okay, that we've taken out. Now it's time you have to see wages increase. I think we're going to see that, especially if we get consumer spending benefiting from lower gas prices.
And you know what? Sometimes you just look at companies that have sprouted up during the recession. We just had Adore Me CEO. They have gotten millions in funding. They're growing exponentially. Warby Parker started during the recession. Yeah. Red Mango. I mean, there are a lot of companies out there that have been able to survive and grow at this time.
You know, Liz, our firm is a cross-border advisory firm, and one of our business lines is bringing companies to the United States. People want to come to the United States, okay? There's no question that if you look around the globe today, the U.S. is the place that most people think will be the engine of growth. That was not the way we were 3, 4, 5 years ago. Everyone was talking China, Middle East. Today, it's the U.S.
And you talk to CEOs. That's what you do at 32 Advisors. Robert, it's great to see you.
Thanks for having me on, Liz.
Okay.
Great to see you.